Is a Fed rate cut coming this week? Hello, member super savers and bond course fans. I hope you're healthy and well. Here are the 3 topics that we'll be covering in this week's update video. 1. Will the first rate cut from the Fed happen at this week's FOMC meeting? This is our community question of the week. 2. Where did Treasury yields end this past week? And 3. What's on the upcoming Treasury auction schedule, and what are the highest yielding new issue agencies, corporates, and brokered CDs currently? As usual, here's our front of video disclaimer. For a detailed disclaimer, please refer to the end of this video. Let's dive in now, folks. So, based on this recent poll, it seems that only a very small group in our Diamond NestEgg community are expecting the Fed to start cutting rates this week. About half of you feel the first rate cut will come in September, with November or December of this year and 2025 as the runner-ups. And the market appears to agree. If we go to the CME Group's Fed Watch tool and scroll further down the page, we can see that at the time of this taping, an overwhelming majority of market participants, 95%, are expecting that the Fed will keep rates where they are at the next FOMC meeting, which would mean rates would stay between 5.25% and 5.5%. Only a very small minority think that the Fed will lower rates by 25 basis points to between 5 and 5.25%. These tabs up here show when the Fed's next meeting rate announcement is expected to occur. And if we click on this 18th of September tab up here, that's the next Fed meeting rate announcement after the current one on the 31st of July. So, if we click on this 18th of September tab, we can see that nearly 88% of the market is expecting a 25 basis point rate cut in September to between 5 and 5.25%. As a way of background, CME here stands for the Chicago Mercantile Exchange, the U.S. and the world's largest futures exchange. It's basically a marketplace where interested parties can buy or sell some items now at a price that is set today for delivery at a future point in time. Meaning a marketplace for participants to make educated guesses or simply bets on the future price of precious metals, foreign currencies, Treasury bonds, and interest rates. This Fed Watch tool, these target rate probabilities, are based on 30-day Fed funds futures prices on the CME. Basically, it tells us where traders and investors at this point in time think the Fed funds rate will be at a future point in time. What this also means is that the probabilities that we've just shown you here can and do change regularly based on what's happening in the marketplace. If you want to see how things look at the time you're watching this video, I've included the link to this CME Fed Watch tool in the first pinned comment below this video. Personally, we don't expect the Fed to start cutting rates at this week's Fed meeting either, despite the recent reports of lower inflation. The latest U.S. GDP report released this past Thursday showed real GDP increased at an annual rate of 2.8% in the second quarter of 2024. This 2.8% came in much higher than market expectation of around 2%, meaning that in our mind, the Fed may have bought itself some more wait-and-see time. Yes, inflation has come down, and yes, unemployment has ticked up a bit, but it seems the economy is still going strong, at least for now. But as some of you have suggested, who knows, right? It is an election year, plus economic data have been known to be corrected after publication as well. So perhaps that will also have some impact on the Fed's rate cut decisions. So with that in mind, let's move on now to the next section of this video. As we so often do at the end of a week, let's compare Treasury yields from this past Friday versus the previous week. Here we have all the maturities that the Treasury issues at auction. Here's where yields stood this past Friday, and here's where yields stood at the end of the previous week. Yields on nearly all maturities were down this past week on news of cooling inflation. And because, or despite, our ongoing political uncertainty. The two exceptions were the 1-month T-bill, which is up only 1 basis point, and the 30-year T-bond, which remains unchanged. Now, let's compare Treasury yields from this past Friday versus the beginning of this year. This row shows where rates ended this past Friday. This row shows where rates were on January 2nd. And this row shows the increase or decrease in rates since the beginning of this year to the time of this taping. Increases in rates are shown in black, and decreases in rates are shown in red. All the shorter dated maturities are slightly down relative to the beginning of 2024, but everything 2-year and above is still up. And the longer the term, the bigger the increase, as you can see here. You can find more details on these rates for any day of the week that the bond market is open on the Treasury's daily Treasury par yield curve rates page. All sources are linked below in the first pinned comment. Now, keep in mind that this overview gives you a general feeling for where rates currently stand along the maturity spectrum. The yields that you may get when you buy at a specific auction or from a specific broker or when you sell will likely differ a little bit from what is shown here. So that was a recap of bond yields from last week. Now, let's take a look at what's on the upcoming Treasury auction schedule, as well as where some of the new issue agencies, corporates, and brokered CDs are going out at. Here we are at Treasury Direct's upcoming auctions page. If we scroll down, we can see that all the weekly T-bill and CMB auctions are happening as usual. Other than that, it's pretty quiet on the auction front for medium and longer dated treasuries. For those of you interested in agency and corporate bonds for a bit of a higher yield, here's where the highest yielding new issue agency bonds stand at the time of this taping on Fidelity's platform. Here's where the highest yielding new issue corporate bonds stand at the moment. And here's where the highest yielding new issue brokered CDs are currently. So who's buying this week? And what are you buying? Drop a comment below and let everyone know. And if you're not sure if treasuries, agencies, corporates, or possibly even munis might be the best fit for you, then check out this video here on our 2024 bond courses, or come join our next live member Q&A in August to continue the discussions further on all things fixed income. We'll have a date shortly after running our next member poll. I've also linked all the details on our bond courses and YouTube Super Saver membership below this video for your convenience. All right, member Super Savers and bond course fans, I hope you enjoyed this video and learned something new. Good luck to everyone who's planning on picking up some bonds this week. And see you again very soon with more brand new wealth building content for your financial journey.